Welcome to Farm Here Daily, a field forward podcast. I'm your host, David Geiger. Today on Farm Here Daily, it's a new month for the grain markets. We chat with Roose of U.S. Commodities about expectations in December. Please be sure to like and follow the podcast as well as our social media at Field Forward Pod. We would love to have you join our community, keeping folks informed about what is affecting our farmers. This is Farm Here Daily. And joining us on Farm Here Daily, we're going to take a look at what is going on in the marketplace now that we are starting out a new month after the holiday week last week here, December 1st. And to do so, we have with us Roose, the president of U.S. Commodities. Don, happy to have you back on the program. And we are going to take a look at some of these markets because we saw some green at the end of the month. And it was a bit of slower trade as we ended the close and started the first notice day, all of that. But now we're in December, seeing a little bit of maybe some profit taking. What's kind of your thoughts as we start the month?
Yeah, glad to be back with you. I think the real question mark, we're coming back at the beginning of the month, and are we going to see a new month, new fund buying? Well, we didn't. We saw a new fund, and I think what we saw is liquidation. The funds have been buying soybeans pretty aggressively, long about 150,000 contracts. And I think the real question mark is with Brazil from mid-January on about $1 cheaper than we are, why would China step in and buy beans from the U.S.? So I think that's a big question mark you have. Are soybeans overvalued without weather problems in South America, which we don't think there are yet, David?
I think that's a good point to bring up initially because we are at the close for Monday. It was $11.28 a bushel for soybeans in the January contract. And you're saying Brazilian beans, maybe in a month and a half or so, are going to be about $1 cheaper than that. Is that equivalent to what we're seeing in terms of what farmers are getting for basis and some of the other issues that farmers are facing?
Well, I think you talk about the basis levels, and there's a big disparity on basis levels. As you get close to that Pacific Northwest area in the Dakotas, Northwest Iowa, the basis level is substantially lower, 80 cents to $1 versus the Western or the Eastern Corn Belt, the Central Corn Belt, can get back to overs. So big disparity on that just because of the way the shipping is. But to answer your question squarely, we're about $1 cheaper or more expensive from mid-January forward versus Brazil. So, that's why you have to ask yourself, is China going to step in and buy 441 million bushels? So far, they bought substantially less than that, putsy amounts, maybe like 50 million bushels so far, possibly. And they're supposed to buy that by the end of December. So you should see a flurry of buying here, but I think a lot of that's built in because as we see the announcements, we actually go lower each time, David.
You mentioned that we might be seeing some liquidation at the moment. Could this just be folks rewarding the market for going so much higher for soybeans?
Well, I think most definitely, it's not only here in the U.S., but it's also in South America. Argentina and Brazil, both farmers have been selling into this rally. When they look at it, they're looking at kind of a gift with the no shortage of grain in the U.S. or the world. And then I think you have to ask yourself, I know we've got to carry out under 300 million on soybeans, but actually when you look at it, maybe our export pace is 150 million too low. So I think that's the real question mark. And it's a little frustrating. The administration continues to talk about we've got a deal. And then, you hear the chief trade negotiator, Secretary Treasurer Bessent, talking about that we're on target for purchases that they've kind of agreed to. Then you have Secretary of Agriculture saying that they hope they get an agreement signed soon. So there's just a lot of question marks what's going on. And I think the market might be starting to grow tired, David. I think chart-wise, to start the week out, we had a hook reversal lower. We think what we're doing is forming a head and shoulders formation on soybeans. And, that one could be, also it could be a bear flag. Both of those, if they break down in here, are negatives technically. Because remember, on January beans, we still have a gap below the market at 1063. So we'll see. I mean, it looks like a market that needs some work to go higher.
What is corn doing in the meantime? Because as we've discussed before, it is still really difficult to make a living off of corn right now. It is very low priced for what input costs are needed for producers. As we move forward into December, is this a continued incentive for farmers to draw back on corn come spring, or are we going to see any movement going there? Is this just following soybeans right now?
Well, I think most definitely producers with the input costs as high as they are, and we had bigger acres of corn planted last year at the expense of soybeans. So don't be surprised if you have 5 million more acres of soybeans and 5 to 6 million more less acres of corn. Like you alluded to, when you talk about if you had 200 bushel corn and you're getting $4 a bushel and you still have negative losses, that's amazing. If you've been at this business a long time, you would think that would lead to profitability. But, the corn market is an interesting one because we're lugging around to carry out a 2.1 billion. We're lugging around that with exports that, have been very strong. It looks like our feed demand with the numbers might be 100 million, 150 million too high. I guess where I'm going is last year, the reason the market went to 520 and a half in February after the January report is because the yield went down substantially, 2.8 bushels, and we went under 180 on yield. Well, right now we're carrying around the 186 yield. Is it possible that we have that kind of a slashing number in the January report? If not, I think that this market probably, David, is overvalued. There's no shortage of corn in the US or in the world. And the problem is, I think the producer is waiting to see what things look like next year. Do we get a weather problem? Do we get a bullish report in January? And without that, the farmer has to take advantage of the carries in the market that we have right now.
I'm glad you brought up the January report because I did want to talk a little bit about the trustworthiness of data. And the last report we got seemed to be obviously as reasonable as they could understand at the time, but it was not the whole picture. That seemed to be the consensus among folks that I've spoken with, is that it was did not show the full picture, and we might not see that until January. Is there any reports or data you're watching in the month of December to help get a glimpse at what we'll be seeing in January?
Well, I think the bottom line, when you look at, I think what we're talking about is the yield standpoint, first of all. And I think it's a little bit of a question mark because the gut slot of Iowa, parts of Missouri, the yields were substantially under what you would think and what the farmer thought he was going to have. Then you have other areas that were probably better. Maybe the Dakota's not as big either. So I think it does bring up a big question mark. When you're talking about 186 yield, that's monstrous compared to last year when we were under 180. I think it's going to be hard to achieve. But then when you look at it, even if we lose 3 or 4 bushels an acre, even if we go down to 182, it's not good enough, I don't think. I think it means that we still have too big of stocks. We'll probably have to look forward to next year, lower acres. Do we get into some kind of weather problem? Does Brazil get into a weather problem in their second corn crop? That's the exportable one. I think you need some help from weather. I always say, David, about 80% of these markets ultimately come down to weather. You either do or don't get a big crop, and you either do or don't get a demand underneath of it was a slow crop.
I would like to also, in considering the grain market, just touch on wheat and what role it's playing at the moment. I haven't heard much conversation so far this year. I tend to focus more on corn and beans. But have you been watching anything in the wheat market and observing how that might have impacts on corn or soybeans?
Well, that's a good point because I think bottom line is the wheat, I think, is an anchor for the corn. Their wheat supplies are so big around the world and even in the U.S. that sometimes they work into feed rations, which that's a direct competition with the corn. But when you look at the wheat market, December Chicago wheat had a key reversal a number of weeks back. at 508, and we've been moving higher since then. What we've done is we've moved up to a higher level, but we haven't gone anyplace. And why is that? There's a harvest someplace around the world all the time. We've got Australia harvesting a crop. That looks like a record. Argentina harvesting a crop. That looks like a record. We have the Black Sea, which had a decent big crop. And by the way, the war there is getting closer to ending than starting. So could that get back to normal shipping? Then you had Europe, which had a large crop. Their harvest is behind them in storage. So it seems like any kind of a minor rally, the farmers want to sell the cash crop because they don't want two crops at once. So I think that's the setup on the wheat market. And that's why maybe it can't go a lot lower, but there's not a really impetus to go higher. And without it going higher, it's an anchor on the corn market. That's the problem, David.
As a tangent to end talks about grain here, I did actually think about something that I haven't really asked anybody yet, mainly because it was too new at the time. But earlier this year, there was a change to wheat where they added the Minneapolis spring wheat marketplace. What's your thoughts on it now that we've had a few months to see that go on the board there? Have you seen much at play there? Is it something worth watching, or is it still just too new to really know much about?
Well, I think unfortunately, this Minneapolis wheat, it doesn't really have the volume. That's the problem. So it's really kind of a market that is a trailer. Chicago has the biggest volume. In Kansas City, of course, has the biggest crop. But we still watch Chicago very close, followed by Kansas City. And then Minneapolis is kind of the stepchild, if you will. Just can't really participate with the other classes. That's the problem, David.
Let's get over to livestock then. Appreciate that note. I wanted to take a glance at the cattle market first, because when we're looking at cattle, we think of the lower grain prices must be good for the cattle market, specifically corn, but soybeans can also be helpful. But what are we looking at in terms of cattle production and cattle prices, because they have been so volatile over the last few months?
Well, yeah, I mean, the cattle market has. And I think part of the reason is December cattle hit a high of 248.30 in the fall, actually, early fall. And we went down last week to just under 205, 204.70, I think. So you had a huge $44 break on cattle in just a short order. So it just tells the volatility. And what we really did is we gapped open lower on cattle at the top. More than likely, that was the cyclical top. And I think what that means, if it's going to be comparable to 2014, which we think it is, where we had a cyclical top, we dropped 30% into 2015, that this might just be the start of a bear market. That doesn't mean that we don't get retracements, back up significantly and then back down again. There's a lot of good cash cattle people that think we're going to average 220 to 230 all the way from now, and on the cash market, all the way from now until the end of March. We'll see on that. I think part of the problem is funds got big loaded up on the long side. The market got frothy. And then we started to talk some of the negative stuff from the demand side of the market, lowering imports, all the things we were afraid could happen, and just torpedoed us down. So hopefully we're reaching some kind of support zone, because you have feedlots that are buying feeders and they were buying them way too high. So you can't have a market that moves around this fast, David. Otherwise, the losses can be too big, as the gains were maybe too big. So volatile market. It's one that we think we put in the cyclical top. We think it's one that's going to be two steps down, one up. Like we always say, you take the stairs up, the elevator down. Certainly felt like you got the shaft going down.
Don, just as a reminder, I think we spoke about this before, 2014 being a year where there was some government intervention, and that caused a pretty big issue in the cattle markets. There's also a concern going around that potentially folks are remembering that for this year, regardless if it happens or not. That memory might influence things as well.
Well, you're exactly right. I've been at this business a few years, and it seems like the more things change, the more they stay the same. It seems like we almost
Right.
regurgitate the same type of thing. And 14 does look very similar to 2025 so far. So we'll see if 26 looks exactly like 2015, but too many similarities. And I think it's just when you get at these areas like cattle, it was like $9 corn coming down. So we know you have to be very, very careful when you have these frothy levels. And I think that was the situation that we had with the cattle market.
I did want to touch on hogs, Iowa being a pretty big producer of hogs, but I know the market isn't super competitive at the trading level for producers. But I did want to generally go over this $80 hog market with cattle prices as high as they've gotten. Why, from your perspective, do you not see hogs in that same volatility level? Because from what I've seen over the past few months, they've been pretty stable for the most part.
Well, one thing about the hog market, this is what I believe, this is what we believe. The hog market is a very, very mature industry. It's vertically integrated, very much like the chicken business. And so if you really look back on it, it's really the disease that changes things a lot, or if we can change the demand, which we haven't been able to do. So if you look back over the last 15 years, we spend most of our time, over 80%, between $60 and $80, maybe call it $62 to $82. That is a sweet spot. We rally up over 100, stall out. You go back under 60, you stall out. The cattle business has done a tremendous job in making a product that the consumer wants, even at a high price. And I think, I don't like to talk negative about it, but I think what's happened in the hog industry, we've produced a hog that's very lean. And if you don't cook it just right, then it's a product that maybe isn't as desirable. So somehow, some way, we either need to get a hog, which probably isn't going to happen, less lean, more fat, or we're going to have to learn how to cook it. And that means we're going to have to do more promotions on the cooking end of it. So we used to do a lot of that, David, and it seems like we've kind of stalled there. So I would say, number one, our exports continue to go up. If we can get the domestic consumption to go up, 25% is export, 75% domestic. So let's see if we can get the domestic flavor back to the hog business.
I appreciate you bringing that up. It is something that seems pretty. I mean, when you have the lower level of beef, it's very consistent regardless of where you go. A hamburger is going to taste like a hamburger for the most part. Very similar with pork. You don't have those specialty very often, those specialty pork chop cuts that are just incredibly flavorful right off the get-go, like you might have with specialty steak. No one goes and buys a $99 pork chop very often from a store, but they'll be willing to do that for a steak.
That's what I mean. I mean, the cattle industry is just amazing that they built this product that is very, very desirable. And I think a lot of it has to do with, the consistency and also the fat content, which maybe isn't what everybody wants, but I think that's what the palate desires. So, yeah, the hats off to the cattle industry is what I would say, David.
Don Roose is the president of U.S. Commodities, joining us today. Don, if folks were listening in, wanted to get a hold of you or the other folks there at U.S. Commodities, how would they do so? What would be the best way?
You bet. Can reach me or our team. They can reach us here at U.S. Commodities at 1-800-247-4071 or visit us on our website.
Don Roose, thank you so much for joining us today on Farm Here Daily.
Glad to be back. Thank you, David.
This is Farm Here Daily, a Field Forward podcast. Thank you again for listening. In order to continue to produce this type of local content, we would love to have you join our community, so please follow the podcast as well as our social media channels at Field Forward Pod. You can also find me on social media at Geiger Reports. Again, I am your host, David Geiger, and I'll be back again tomorrow, everybody.